happy to be a part of the Red Cloud Fall Mining Showcase. This is the first time we've done a collaboration like this at the exchange with an investment broker. So banker in Canada, we think it might be the start of something special. We certainly have been longtime supporters of the TMX Group of Red Cloud, even throughout the bad years when mining was not as popular as it's become. But we've always recognized Red Cloud's singular focus on the mining sector. And so we think this is a great partnership, and we hope to do more of it. That being said, my name is Dean McPherson. If we've not had a chance to meet, I'm the head of global mining business development at the TMX Group / TSX, Toronto Stock Exchange, or TSX Venture Exchange. So, as I said earlier, we are focusing on uranium. Yesterday, I was at a luncheon with Rob McEwen and Pierre Lasson, and the focus, I would say, was generally on the precious metal space. Today, we thought it would be a good opportunity to sort of shine a light on the uranium space, because we do believe that and we've seen it, we've all seen the news, we've all seen the activity, and at the exchange, we certainly are seeing a lot of inbound interest in projects on the uranium, focused on uranium, and for good reason. And we'll talk, I think the panels that we have today to present for lunch will certainly highlight why that is so, why uranium has come into focus, and why we think it's going to continue to be in focus in the near term here. So just a little idea of what we have lined up here. We have a fireside chat with Mark Bunting hosting David Cates, who's CEO of Denison Mining. Phil Williams is CEO of ATHA Energy, and they'll be also joined by David Talbot, who's perhaps one of the country's most renowned analysts in the uranium space. And we're looking forward to that after I get off the stage here. And after that, we'll have a little chat about exploration in the uranium space. And we have really good examples of companies that we think can give you a very good insight into what are some of the challenges and opportunities that our exploration companies, development companies are facing. We have Cory Belyk from CanAlaska Uranium. We have Wayne Heili, Peninsula Energy. And we have Troy Boisjoli? Troy, sorry. From ATHA Energy. So we're looking forward to that. And the highlight, I would say, we have a special guest. We have Sergio Lujan from Sprott, presenting their Sprott Physical Uranium Trust, listed with the TSX as well. And that should be quite interesting, because that made quite a splash when that came into market, and I think you'll see some of Sprott's thoughts around why they thought it was the right time to bring this to market and give investors an opportunity to own physical uranium. So I wanted to start off with a little refresher about our exchange, a little plug here for the TSX. I'll be quick, because a lot of our guests here are familiar with us. But as you know, a lot of talk has been made about some of the challenges that we've been having with the government in terms of getting involved in the capital markets. But when I talk to global companies about joining the Toronto Stock Exchange, the first thing I mention is our location and being a financial institution services company in Canada. There are several good reasons why that's a big selling point for us. Just an idea of how we stack up here globally. This is a pretty current slide that I like to point to. Sort of shows how Canada is performing. And I say Canada because TSXV pretty much represents, is a good proxy for the Canadian capital markets. No offense to my friends from other exchanges who are around. But we are currently the fourth ranked in terms of the amount of equity capital raised, and we're fifth in terms of the new listings so far this year. We're all dying to see some large IPOs, but we do still have new listings coming to market, smaller stuff, and people tend to overlook that. I keep reminding people that it's not just big headline IPOs that matters to us. All our 1,200 issuers matter. So right now we're ranked behind the big guns, as you can see here. NYSE is fourth, we are fifth, and we think for a small country of just over 35 million, we're doing pretty well. on the global scheme of things. Big sell for us is that we're an international market. 40% of trading really originates outside of Canada. So a big sell for us is that we're Canada located, Canada strong, but we are a gateway to North American capital and global capital, in fact. So you join us, you're actually accessing international markets, international investors who are looking for a market they can trust with companies they know have passed the lens. A big selling point for us, of course, I mentioned, we have representation here. Our first panel represents pretty much the TSX. The second panel represents the TSXV, something they're extremely proud of compared to other popular two-tier markets in the world. I don't think anyone can boast the reputation and the record that we have. Over half of our TSX mining companies started out life on the venture market. You can look to London, you can look to New York, you can look anywhere else in the world. No one else has that record. This is outstanding for us, that our TSXV is a robust market, and at times over the past 2 years it's actually exceeded TSX volume in terms of trading volume. So phenomenal record. And this goes outside of mining as well. You'll see here over a third of our innovation companies actually started out on the venture market. So we are a growth market. We provide a growth opportunity that is outstanding compared to our competitors for sure. Another thing that's a big selling point for us is just relatively the cost of listing with us. And a big component of that cost is how much it costs to insure your board and directors in, let's say, New York. Often I speak to larger IPO opportunities and they're considering New York or NASDAQ. And the cost to list on a TSX to get that same access that you'll get in the US to capital, you're paying a third of the cost of listing in the US. And a big component of that cost is the insurance, just the insurance. And I often say to people, there's a reason why the insurance is 3 times what it is in Canada. We just don't have that litigious environment that exists there. Good for entrepreneurs trying to retain ownership in their companies. So where we are right now, as far as up to August this year, we're looking at 40% of publicly listed companies globally in the mining universe are listed with us, so we're still leaders in that respect. And of course, our graduation program, that is the process of moving from the TSXV to the TSX, has been robust, and we expect that to continue. We have, so far this year, it's been a tough year, we all know. It's better than last year. I was saying to someone at lunch that, last year in 2022, we thought it couldn't get worse. 2023, we were like, okay, so this has to be the bottom. Well, I think we were right then. The second time was right because we have been climbing out of the ditch since the start of this year. It's been quite encouraging in terms of the number of financings that we've seen and also the number of new listings that we've seen. People say, where are the IPOs? We're still hoping to see the bigger IPOs. What we find is that investors are still comfortable with companies that they know, management they know, projects they know. And so as we've seen an increase in financing activities and new listings, we're not seeing big IPOs yet because we just find the risk appetite hasn't come back to the level where people are willing to put big investments into new names, new projects. So hopefully that changes. We've seen the interest rate cuts in September. We think that's a good sort of indicator that maybe we're pretty close. So good example of where we are compared to our other markets. This is something that comes to me quite often is, how are things going in Australia relative to Canada? Because Australia really is our biggest competitor in the mining space. We're still ahead. As I said, we had 30 new listings join our markets this year. Nowhere near where we want it to be, but it's almost twice what we saw in Australia. So for those who think that it's going robust down in Australia, not the case. I spoke a little bit about these numbers already, so I'll just move ahead quickly since we're pressed for time here. Just wanted to point to this slide here that in terms of commodities that are represented in our markets, precious metals still is dominant, over 50%. And the guys yesterday pointed out for all the good reasons why this should continue and perhaps it will continue. But we think that there are other commodities here that you should point to, and we want to focus today, as I said, on uranium at 6% there. There are good reasons, and you'll see in a few minutes why that there's confidence so much in the marketplace that this will expand in terms of projects represented on our market. Uranium is really going to lead the growth going forward. Closing off with this one here, just to show the breadth of our scale globally. We are a global marketplace. So about 50% of the projects that are listed on our market are outside of North America. So quite significant relative to other markets as well, where you'll find projects tend to be concentrated on the home market, closer to the home market. We have always been a global marketplace and had projects as far as Russia and well, maybe not Russia anymore, so much anymore, but it's maybe we'll go back there. But we are world focused. With that, I want to invite Mark Bunting to start off with the first panel. We want to invite David Cates and Phil Williams from ATHA Energy. David Cates from Denison Mining, and of course David Talbot from Red Cloud Securities. Perfect. Thank you, Mark. Good slide.
Thanks for joining us, everyone. Give me 2 seconds. I want to make sure I can see everyone here. All right, so trends in the nuclear and uranium market. That's our theme today. Just some brief introductions here. To my immediate left is David Cates, CEO of Denison Mines. He was appointed CEO in 2015 after holding roles as CFO and VP Finance and Taxation. He's also worked with Kinross and PricewaterhouseCoopers. And David is a director of Denison, Sky Harbor Resources, and the Canadian Nuclear Association. On the far end there is Phil Williams, CEO of ATHA Energy. He's got a commerce background. He's had numerous senior roles across various disciplines with a focus on uranium, including stints at Westwind Partners, Pine Tree Capital, Dundee Capital Markets as well. He is a co-founder of Uranium Royalty and Consolidated Uranium before its merger with ATHA Energy. And then to David's left is David Talbot, Managing Director, Head of Research at Red Cloud Securities. He's in his 31st year in mining. He's a geologist. He worked in gold exploration for almost 10 years with Placer Dome, Franco-Nevada, and Newmont Capital. And he's now worked in research on the equity side for more than 20 years with Dundee Capital Markets, 8 Capital, and now Red Cloud. Now, first question will go to David and Phil here, and David will have you kick it off. Both of you are leaders in the uranium mining industry. Can you share how your companies have responded to market fluctuations amid this growing interest in nuclear energy?
Yeah, thanks very much, Mark. Appreciate the introduction, and it's my pleasure to be here on the stage with Dave and Phil as well. Look, our company has a very long history in the uranium space, and we have quite a diverse mix of assets in the Athabasca Basin. In some ways, one of our advantages has been that we haven't had to be a knee-jerk responder to the market. And that's really owing to the kind of economics that we have from our flagship project, Wheeler River and the Phoenix deposit. Fortunately, it would have been economic in a $30 uranium market. So that's allowed us to work over the last 5 years to be in a position today where we're very close to being permitted and we're able to make an investment decision and actually bring new production to the market. One of our sector's challenges is companies that maybe haven't been able to do that in that interim. But we do have, through our portfolio, other projects, and that's really where we're being more responsive to the changing market conditions. We have interests in projects with Orano. And Orano, for those of you who don't know, is French state-owned nuclear fuel cycle company. They're a giant in our industry. We've recently announced the restart of mining at our McLean Lake project, and so that production is expected in 2025. That is in response to higher prices. We didn't need $85 or $100 prices to get this project back up and running, but certainly we needed things north of 50. We will be in production next year, roughly 800,000 pounds planned for McClean Lake. Our share of that's around 200,000 pounds. The other thing we're doing is we're investing in the growth projects. Phoenix will be an incredibly positive project, but we'll generate real cash flows from that. We need places to deploy it. So we are starting to look at the next level of assets, moving them forward and positioning ourselves for long-term growth.
Phil, the same question.
Sure. Thanks, Mark, and thanks everyone for coming today. I think it's an amazing time to be talking about uranium, obviously. Our company hasn't been around as long as Denison's has been, but the people have, and our vision is really long-term. And several years ago when we started the business, it was really about seeing the future, nuclear coming back and uranium prices coming back, and putting together a portfolio of assets. And that's what we've done over the last 5-6 years. We've collected assets all over the world, many resources, projects that have seen significant expenditures, but we're never able to move forward because of market dynamics. And we did that at the bottom, and now we're starting, I think we're in the middle and going significantly higher. And with over 300 million pounds of uranium across projects around the world, we think ISO is tremendously well positioned. We continue to be busy on the M&A front. We just announced an acquisition 2 weeks ago requiring near-term production in the United States, which we think is going to be increasingly a more important source of supply in the space going forward. So we're responding to the market fluctuations by being ahead of what's coming.
David Talbot, question for you. From an investment perspective, how would you summarize the current state of the uranium and nuclear market, and what key factors are influencing investors' sentiment right now?
Yeah, thank you, Mark. That's sort of a twofold project. I think investors are looking at the nuclear industry, and then they're looking at uranium prices, and those are two different things. And there's sort of been they haven't necessarily moved hand in hand over the last couple of years perfectly. But let's start talking about the nuclear sector, and I think we're in a hot sector for sure. There's a lot of support from different countries, different governments. Government policies are being put in place that are going in the right direction. We've got the COP28 discussing about nuclear power, and countries are supporting the growth of nuclear power. We've got the G7 behind it. Other countries are coming in, and we are seeing growth of nuclear reactors across the globe. I think we're up over 430 reactors right now, and that's we're close to all-time highs there. We're also seeing, and this is almost as important, the extension of reactor lives, because those are already built, they're already running, but those pounds are not necessarily in people's models. So when those get extended suddenly to 60 to 80 years life of reactor, that adds pounds without adding all the capital and all the headaches of permitting beyond that. So I think that's something that we can look at as well. A couple of the big drivers here that we've had over the last couple of days, and one of the reasons why the stocks are running quite well, we've had Amazon come into the market, then this sort of just another one of these big AI and tech mega companies, such as Microsoft and Google and Apple, even looking at the space, which is really supporting growth. And we've also had news out of Kazakhstan that Kazatomprom wants to sell a huge proportion of its product directly into China, so much that it needs to actually get permission from its shareholders to do so. So that is certainly going to have impact here. Looking at the price, the price it moved very quickly in the last third of last year. Probably too quickly. We didn't need to get to $107 last year. It got to, I guess it got to 109. 91 at the end of the year, and it got to 107 earlier this year before pulling back. But I think we've seen that growth steadily over the last few months. We're at $83 right now. That's a healthy number to me. We have seen the stocks go up over the last month or so, significantly, 20, 30, 40% in some cases. But when you look at the stocks are still 30 to 70% lower than their 52-week highs for the most part. So there is still room to go.
All right, this next question is for all of you. We'll have David Cates kick it off here. We've seen significant fluctuations in uranium prices for the past decade or so. What key factors do you think will drive future demand for uranium, and how sustainable is this current market environment?
Yeah, thanks, Mark. Look, there's something unique about the uranium market, and it's actually much more predictable than people would think. Nuclear reactors run for very long times. There's significant capital investments. Once they're built, they run. They run until they finish running at 60, 80 years, maybe not even. So the whole demand side of this is really underpinned by an existing global fleet of reactors. This is not a exponential growth commodity story. We're talking about a lot of growth potential, and it's very exciting. The announcements around data center usage and the big tech being behind it, that's all incredibly exciting. But it's really just evidence of what nuclear power always was and will continue to be, which is affordable, reliable, and clean. And those themes have been catching the governments and the power generators, have caught them over the last several years as really important to their energy mixes. And so, look, I have great confidence around where it's going in demand, primarily because we are seeing a broader trend to this. And the reactors that are being built and committed to being built around the world, it's not just tech companies that are doing this. It's countries that are deploying new fleets of conventional large-scale reactors. That demand is pretty predictable. That demand is something we can lean on. We are not relying on, for a robust uranium market, for example, we are not relying on exponential growth from new interest. That stuff is not factored into most of the models, and it's not required. And so that's what gives me great confidence that we have quite a long runway ahead of us, because we've got this enormous base of large-scale utility use for reactors that's increasing, and on top of it, we have SMRs, we have data center AI connections. That's all on top, guys. That is not what's driving the actual demand right now. The demand is from power generation, from utility, national scale, large scale grids. And that stuff's predictable, reliable, and already there.
Yeah, I would add to that. When you talk about the fluctuation in the price, you're talking about the spot price. And the spot price is not where most of the uranium trades on an annual basis. It is very volatile, and it's impacted a lot by players that aren't really the end buyers or the producers of uranium. It's intermediaries, it's financial players. And so it does tend to go up and down more dramatically than the long-term price, which I think is what us and other producers really look at. And that price has gone straight up over the last 3 years. It hasn't ticked down at all. And it's almost level with spot price today. And so I think, investors do focus on spot price, and you can understand why. I do think that both prices are going up dramatically from here, but the trend has been higher for the price that matters to the real buyers and real sellers.
Yeah, and I think the uranium in both markets, whether it's spot and term, is getting tighter as we speak. There aren't that many companies out there that are actually producing. There should be a few more in the next several years, and we'll see some come back to production. But the good companies, the solid companies that have significant production that a lot of the nuclear utilities can count on, that they trust, still really has to materialize. So, one thing I do think will happen over the next few years, especially with long-term pricing and spot pricing roughly in the same neighborhood, is that it gives everybody the comfort level that, okay, this is the price that I should be paying. But what I do expect is that I think the long-term contracts will start going out deeper into the future again. If we go back 20 years ago, I'd say the contracts were roughly 7 to 10 years in duration. Over the last several years, they say Fukushima since, they shortened significantly, and therefore we do have some pounds sold off into the future, but there is a lot of uncovered demand out there. So.
Mark, if I may, I just want to layer on to something Phil said, and Phil, just for clarity for everyone, the long-term price. The long-term price, for those who maybe aren't as familiar with it, this is a price that is quoted that reflects contracts that occur over long horizons versus immediate deliveries in the market. And from a volume standpoint, historically, you'll see 3/4 of the market's volume go through the term market. And Phil's not wrong. He's exactly right with what he said. The price has gone only up. But I would say I might not use the terminology straight up because it makes it seem like it's a very volatile, rapid rise. It's been a sustained, measured, calm appreciation of the term price. Those contracts require one-to-one negotiation between utilities and producers. So it really is reflecting a meeting of the minds of where meaningful volumes can transact. So it is a very meaningful measure for the market, and it is only trending up. And that makes sense when you look at the cost structure of the incremental projects. Our market has moved away from an oversupplied market where inventories were driving price and people were competing to sell. Now, the buyers are actually having to incent the producers to sell. The cost of production becomes relevant, and the price, long-term price moving up steadily is reflecting that. It's providing integrity to that thinking. And so it is a very important point for people to understand here. Price volatility on spot is one thing, can be very exciting, but the gradual positive progression on term is very encouraging from an overall market stability standpoint.
And just one other thing to add just on pricing, and I heard a presentation from Grant Isaac at Chemical last week, and we talk about the current contracts that are being signed. They're being signed, some of them are being signed with floors and ceilings, and the floors are set at the current market price, so somewhere around $75, $80 with ceilings, and these are his numbers, and he's in the market every day talking to buyers, and he's saying the ceiling prices are $125 to $130. So what we're looking at today, whether it's the term price or the spot price, that's actually the floor price. So it's only going up from here.
The fact that utilities are putting ceilings in there means they think they're going there.
All right. Well, we may circle back to contracts and nuclear utilities and what they're looking for and get some more flavor on negotiations. Next question here for all of you. Why don't we go around the horn again, starting with David Cates here. Some countries are talking about a potential tripling of nuclear capacity. While this sounds positive, do you believe the industry is prepared for such a rapid expansion?
Well, I think the nuclear energy industry is prepared for it. I sit on the board of the Canadian Nuclear Association, and we're incredibly positive around the commitments to triple nuclear power, and I do think that the utilities and government are going to be behind pulling that off. Whether the uranium market is prepared for it is another question. And look, I think there are companies that are prepared for it or are preparing for it, but you have to remember how difficult this industry has been for how long. Since 2012, I mean, it was an incredibly difficult environment to operate in. The amount of capital that was being invested in exploration or development was very low. And really, until recently, many of the development projects in the world were not even close to being economic. I can tell you from firsthand experience, we've been developing Phoenix, advancing Phoenix as a development project since 2018. It takes time to permit, takes time to build skills, takes time to do engineering, takes time to build like a workforce. It's been incredibly difficult, and we've been doing it counter-cycle. I think the idea that the supply side is going to meet the demands effortlessly is really an unlikely outcome. We have companies that have projects in could be in Africa, let's say, where a few years ago their projects were so far out of the money they might have had 3 people working on that project. We have a team of like 45, 50 to advance a project. That doesn't happen overnight. It doesn't happen overnight. I think the supply side is going to struggle. I think there will be companies that do excellent jobs and execute, and they will be very successful. I think there will be others that, despite their best efforts, will struggle to hit on schedule, and they'll struggle to hit on budget. And it's more likely than not, that the supply side is a weakness moving forward.
Yeah, I mean, the mantra that I espouse is every pound of uranium is going to be required. And that's not to necessarily meet the tripling of demand that you're talking about. That's just what we see in front of us. And so I think David's entirely right. I mean, there has been this underinvestment. I looked the numbers up before we came up. Back in 2007, 2008, at the peak of the last bull market, over $1 billion was being spent per annum on exploration and development of uranium projects. That went down into the tens of millions of dollars for a decade post-Fukushima. It's only starting to come back. I think last year was maybe $400 or $500 million. So we're getting there, but we're not nearly far enough along. New discoveries are only just starting to be made. And the life cycle from discovery to a mine, in the best of circumstance, is 15 years. So that is the big risk to the space. And I think it's going to create a very interesting dynamic for the end users and potentially even these tech companies as they look maybe downstream to secure some of that supply. I think that could be a very interesting situation that might play out in the space. And again, as we think about our portfolio, 300 million pounds of uranium in the ground in some of the best jurisdictions in the world, we feel pretty comfortable about where we are going forward.
If we go back 14 years to 2010, the real big spike in uranium price and activity that year was when China came to market and they bought pounds from Cameco, I think it was in June, and then Orano in maybe October, November. And that really spiked up the price, got everybody interested, at least until Fukushima. And one thing we are seeing a little bit differently this time around, and maybe this goes to show with the news yesterday from Kazatomprom selling so much material into China, is that China this time now has a robust industry behind it. It's growing, that industry. It's going to surpass the U.S. Probably at least within the next decade, if not sooner than that. So they are going out, they're buying product in the market, they are buying projects, they're doing a lot of work in Africa, taking away projects that otherwise would be sending material to the West, where still most of the reactors are. Not necessarily where the most growth is, but where the most reactors are. So there's that issue about disappearing deposits for Western consumption. But you've also now got the whole fuel cycle. It's not just one thing to mine uranium. Now what do you have to do? You've got to convert it into a gas, you have to enrich it, and then you fabricate it into a fuel. And there's a dearth of enrichment capacity out there outside of Russia. The U.S. had, up until now, 40% of its material enriched inside Russia. And that material then came to the U.S. And that's what this uranium mining import ban, or uranium import ban, is going to halt. One of the things it's going to halt. So that's a concern. So what do we need to do? We need to get more conversion, certainly enrichment, fuel fabrication in the Western countries. And I know Orano's set to build in, I think it's Oak Ridge's, in Tennessee, not too far from McCabbins. So they're going to get that up and running, but still there needs to be more attention to that.
Well, Dave, just on the fuel cycle, you're absolutely right. Like, the whole fuel cycle is a bit of a challenge. But I will say that there's an awareness around enrichment and conversion amongst sort of the, like the DOE and those kind of players in the United States. But there is a degree of complacency around the uranium part. Enrichment and conversion are very concentrated industries. These are very specialized things, and there's only so many providers. So it's very easy for government to understand that there's a constraint there, and that they need to, for example, increase capacity. The uranium side of it, this is more of an open market of multiple producers. And so that's maybe a little bit less obvious for the industry players and regulators to understand that there's similar constraints. I mean, we simply will struggle to respond rapidly on the uranium development side. And I do think that that's an area of complacency. That is an important thing from the investment thesis standpoint. We have utilities that, despite increased prices, are still somewhat reluctant to contract and/or contract at higher levels with this view that there is an ample amount of uranium that will just be incented at some point to the market. They miss that price signals are necessary, but time is also necessary. Price signals do not turn on mines tomorrow, and I think it's an area of great complacency in the fuel cycle, and it may prove to be the area that is most challenged, actually, because it's getting the least attention.
Next question for David Cates and Phil, and we'll start with you, Phil. And this is adding to the supply-demand scenario situation. What are the specific supply chain or infrastructure challenges that the industry is facing right now, and how are your companies planning for this?
Yeah, I mean, I think people is a big one, human resources. There just aren't enough trained uranium miners. Again, it's really a function of the last decade being relatively dormant, so finding good people. We've attracted people from other commodities. We just hired a gentleman from a mining company, a gold mining company in Alaska, and moved his whole family down to Denver to start working on our projects. So you have to be creative, you have to offer good packages, you have to be an attractive company to work for. And so we're trying to get ahead of that, particularly, we've just announced an acquisition of some additional projects down in the United States. The company that we're buying doesn't come with a large team, so this is foremost on our mind. We spent a lot of time in the local communities, getting our name out and talking to some of the local politicians and getting help with job fairs and trying to attract talent. So I think that's going to be certainly one of the big issues. I think obviously inputs are also an issue, and maybe not necessarily for us today, but we're hearing about sulfuric acid shortages in Kazakhstan, which is an important input in mining in situ deposits. So I think those are some of the big things. David's probably got a couple of others that he can add in.
Yeah, I mean, Phil, that's I was going to go to the sulfuric acid because that's talked about a lot, and we've certainly seen Kazakhstan struggle to achieve its production targets. They've talked openly about their difficulty obtaining sufficient sulfuric acid for their operations. And again, for those who may not know, I mean, this is a key reagent for their ISR mining operations. They use an acid leach. It is a real problem in that part of the world. And I think it'll continue to be a challenge for Kazatomprom, which is really relevant for the sector overall because they're the largest source of production in the world. I think we're very fortunate in Canada. Our ISR project, Phoenix, is also an acid leach, but we are not going to be procuring our acid from the same place as Kazatomprom. In Saskatchewan, we have the fortune of being located next to Alberta, and Alberta has significant stockpiles of sulfur as an outcome of the oil and gas industry there. So, that is something that we certainly have an advantage on, is being able to access key reagents without the risk of the same sort of supply chain issue that we see out of Kazakhstan. On our end, look, I think Phil's right on people. Most of our inputs we have been able to procure for test mining as well as in our long lead procurement. Procurement timelines are longer than you would wish for a number of components, but we're well ahead of that based on our front-end engineering design work and having itemized the items that we need to procure. We're over a year into long lead procurement for Phoenix, and so we're managing that end of the supply chain right. But Phil's right; it's about people. What we've done, Mark, on that side is we started recruiting early and a bit, again, counter-cycle. So we've been building our team before it was popular to advance projects because our project could be advanced before the market improved. And that's allowed us to retain some really key people. We are focused on creating a great work environment. We were recently certified a great place to work. This is kind of important because we have to build up a crew of operators as well for our site. And so we have made our overall value proposition to employees more enhanced. and we are trying to make sure that they want to work for us. We are leveraging what we're doing. It's exciting. It's a first of its kind in Canada. These are people, we want to hire people that want this challenge and are going to succeed with it. And we're finding some really great people. Most of our people are based in Saskatoon, which is not a major center, and it is competitive, but we've been very successful in terms of creating the right kind of environment for people to want to work. And we'll have to keep up with that because it'll continue to be competitive. And at the end of the day, while we're mining uranium, we're not able to do it without our people.
I would add another constraint is going to be permitting. Permitting timelines are already very long, particularly for uranium, especially if you're building a new mill processing facility. And we've already seen delays in permitting in some projects, or at least extensions. Permitting seems to be taking longer, and the agencies, quite frankly, aren't staffed up for it. If we need to get as many new mines online as fast as we need them, we need regulatory bodies that are staffed up and ready to take the applications and process them. We're not there yet, but we are seeing progress being made, particularly in Canada. I think with the number of new mines that are putting permit applications in, those agencies are building up their teams and getting more experience, and so I think things might move faster as we go forward. But in the United States, there's basically been no domestic production for the last couple of years, and not many new mines have been permitted. So I think that's going to be a constraint, and we're going to have to work through it if we want to meet this onslaught of demand that's coming.
Question for David Talbot. We're seeing a lot of positive trends in the nuclear power sector, as we know, among them proactive government policies, improving public acceptance, better economics, climate change impacts, and energy security concerns. So, David, do any of these trends stand out as being more important than the others, or would you call the tailwinds in the sector right now just kind of a perfect storm?
I do think it is a perfect storm, but I'm going to put a word out there, and that word is fear. I think right now, in the nuclear sector, it doesn't happen by accident. There's a long lead time in the planning and the planning of building these things and permitting them and constructing them. But when we're looking at it from the market's point of view and seeing the market sentiment change and the general public sentiment change, I think they're looking really the two factors, and you did mention them. It's climate change, or ESG, and it's security of supply, right? And now climate change, that's going to always be there. It's been there for years. I don't think it's going to change. If anything, it's probably accelerating. People in Florida saying, why am I getting hit with hurricanes in back-to-back weeks? I think there will be people saying, how can we curb this? How do we decarbonize our energy output? So I think that is certainly going to be a main driver. What's probably going to be a little bit more acute is the security of supply. We've got countries that are saying, do we have enough energy? What happens if big AI, big IT companies need more? Suddenly we are seeing companies look at their energy supply. And that hasn't really been an issue in the past, not beyond maybe diesel gen sets at a mine site or somewhere in a small town way off the grid. But that's something we're looking at. Plus, we've still got all these EVs that we're supposed to be building and selling. And last month, September, was the largest number of EV sales in history at 1.7 million. So that is still coming, no matter what's happening with the lithium price. So, I think that is going to drive uranium prices. Both of them are probably going to drive demand, uranium prices. But security of supply is going to be one of those things that maybe impacts us in a more lumpy way, especially if there's an invasion here or an acquisition there or a massive spot sale or long-term sale there. And so I think that's, and then you throw in uranium import bans, there's going to be a lot of concern about supply. And I think that's going to lead to possibly east and west pricing, and it'll be, a race to get your pounds.
A nice segue to three geopolitical and policy questions for each of you. We'll start with David Cates. You touched on Ukraine and Russia. How might Russia respond if the U.S. Stays on track to halt Russian imports by 2028?
Yeah, Mark, this question, it's a great question for me, because I've had some comments on this before, and thus far I've not been correct on this, but I'm not really a conspiracy theorist, but as soon as I started getting that question over the summer, I started to really think about what would Russia do with this situation if they were trying to be as sinister as possible, as I imagine Vladimir Putin would be. You know, I imagine he'd be a sinister person. If I were to meet him, he'd probably be very sinister. So I thought, well, look, they probably would do nothing until they could see waivers that were granted. And in the waivers, they would say, well, we absolutely need to allow these U.S. utilities to still get uranium from Russia. Otherwise, it would have a profound impact to the U.S. electric grid. And so thus, we must allow them to have a waiver from this prohibition against getting Russian uranium. Why, that would be exactly what Vladimir Putin would want, is to say, oh, well, now I'm going to shut that uranium down and show our strength to the, against the West. They need our uranium, and we are going to curtail it from going there. So that was my narrative for a while. I'm a little bit surprised it hasn't happened already, because the waivers have been granted, some of them. And so it would be a very reasonable thing for Russia to now say, well, since you need it so much, of course, now we're going to shut it off. It could still happen. I think what we're seeing is that the waivers have not been extended periods of time waivers. And so the end of Russian uranium is near. Perhaps Russia is doing the math on we'd rather get the dollars from those pounds for now. But the reality is that the market is already split. No U.S. utility is sensibly signing additional contracts with Russia. Like, that's not possible. They would never do it. They've already started to self-sanction. So I think the fact that we're not relying on like a knee-jerk Russia waiver reaction is probably better for our market. There were a lot of people who were playing that very binary. They would or wouldn't get waivers, or there would or wouldn't be a Russian curtailment of material to the U.S. I mean, certainly there was a trade around that. I don't think that's the way to play it. At the end of the day, Russian uranium is not it's not going to be very friendly in most places, and most of the utilities have already turned it off. So I think there could still be a response. You never know what soundbite or political maneuver Russia would want or take advantage of. It could happen. It would be favorable, at least near-term market reaction, but probably doesn't change the actual fundamentals of the market right now, because the market is generally taking itself off of Russian uranium.
Okay, next up, David Talbot. What role do you see nuclear energy playing in the energy transition, specifically small modular reactors, SMRs? And what key policy shifts or regulatory actions would you like to see to support the expansion of nuclear energy?
Yeah, so nuclear's always been that stable, large base load power, and that's going to increase in importance across the globe, in my opinion, as energy becomes more and more required. So the other thing we will need it to do is decarbonize the world, and that's leading to this transformation to cleaner energy. Heavy industry is getting involved. As we said several times already, IT and big companies are getting involved. And what they're looking at are the SMRs for the most part. So, yes, it's still probably baseload power, but it's going to be a little bit more focused. You'll be able to put one of these next to your plant in Virginia or in Seattle or Washington State, wherever Amazon was going to put theirs. But these are going to be smaller, perhaps more cost-effective, cheaper to build, more efficient, safer. So there's a lot of pros when it comes to this. The market over the last couple of days has really moved. The stocks have really moved on the Amazon news. So maybe put this into perspective. Amazon ordered 3 of these small modular reactors, somewhere between 620 and maybe 1,000 megawatts of power is expected from that. So, the average reactor being built, main reactor, is probably 1,200 megawatts. So, Amazon just ordered 80% of a reactor, and the stocks gained 20%. Cameco went up 8% on that news. My God, hard to tell exactly because of the Kazatomprom news in there as well, but certainly people are paying a lot of attention to that. More attention to that than they are the Kazatomprom news in the general media. I think new technology is going to play a role. You know, we need to look at new different fuels. We need to look at different enrichment technologies, whether it's laser or something else. I think when it comes to mining, I think radiometric sorting will become more interesting. You know, David Gates is looking at both ISR in the Athabasca Basin, which has never been used before, and the SABRE technology, which could really become a game changer for those deposits that are, you know, you don't necessarily want to put underground development to. And then on the exploration side, I know Phil likes ANT surveys, you know, on the exploration to find those big bodies of alteration. So these are things that I see advancing, becoming more prevalent.
Dave, just on the SMRs, you know, maybe everyone knows this, but if they don't, it's important. SMRs are not that far out there. They're not futuristic. There are some new technologies, but there's also some really established and straightforward technologies. And in Ontario, we are building 4 SMRs at Darlington. Canadian Infrastructure Bank put $1 billion up to OPG for site preparation for the first one. OPG is talking about the first SMR. It's a GE Hitachi design being in operation before 2030. You know, like, this is not far out. This is not wishful thinking. They've already prepared the site. They recently had a Canadian Nuclear Safety Commission hearing on the licensing of the first SMR. So, you know, there is a lot of discussion, especially with the news over the last few days, around SMRs and the technologies. A number of different companies are quoted, and a number of the different, vendors, I should say, are quoted in a number of the different news releases. But this is not a super scientific, future-oriented thing. Like, we are already building one in Ontario, and it's a design that has already been selected by OPG, and they're going to build 4.
And the demand from SMRs isn't really in anyone's models.
It's
like
in
Dave,
none
in
of
your
the
supply and demand
models.
model, how much demand do you have coming from SMRs?
None. Same with
It's not.
WNA.
And we're at a deficit without SMRs.
And Phil, we're already building them.
Yeah, so that's part of the policy shift that we're seeing. So we need more investment in these. We need investment in the fuel cycle. You know, both on the, like Dave said, conversion enrichment. We need different fuels. We need government incentives. We need tax grants, government loans, guarantees. You know, so these are some of the policies that we need to come down the road. I don't think anybody's looking for free money, especially in the uranium sector. I think a healthy nuclear sector will lead to a healthy uranium sector.
We have just under 5 minutes left. We're going to do Q&A now. We have microphones on either side of the room. Put your hand up, please. And okay, we've got the microphone there. And just quickly, while we're waiting for somebody to ask a question, and sort of rapid fire, if you could. I know it's tough to do, but what's the one key thing you want people to take away from this talk, and/or do you have a prediction for something that's going to happen in the uranium sector in the next 5-10 years?
Well, I'll start with a prediction. I think there's going to be more consolidation in the sector. I mean, we're part of it right now. We're, you know, I think one of the more active companies, but I can see bigger companies getting better access to capital. You know, we're going around the world talking to investors, and they're not quite ready to look at the smaller companies. The bigger companies trade better, and there's economies of scale and there's synergies to be had. So I think we're going to see consolidation continue to happen, and we hope to be a big part of it.
David Case?
Yeah, look, I think with the news in the recent days around tech and SMRs, actually what I want to hammer home is that this is not a sensationalized industry that we're in. These are positive stories, but they're really unearthing things that are fundamental. They're unearthing the rationale for selecting nuclear energy that's happening across the world. As the AI trade goes up and goes down, nuclear energy should not trade down with it because the demand is from energy consumption. Yes, energy consumption is also related to data processing, but the valuation of an AI company really has nothing to do with the fact that tech needs power and tech sees the importance of nuclear energy. So I don't want people to get turned off as things are volatile in the markets around this. This is a boring industry. Like, power generation is pretty boring. Building nuclear reactors is pretty boring. It's exciting because there's major issues with the market that will lead to higher prices. So I do want people to take that away. This isn't about AI sensationalism or that sort of thing. This is just power generation.
Yeah, this global resurgence in nuclear is happening. That's going to lead to higher uranium demand, and that's going to be done in a constrained environment, in a challenging environment, because it's hard to mine these things, it's hard to permit these things, and then you throw on top the geopolitical risk, that's another layer of complexity here.
All right, just time for a couple of questions. Where do we have questions? One over here. Over there. Who's got the mic? Okay. Sorry, I'm blocked here.
Yeah, uranium and copper go hand in hand in this era. I just want to ask the following question. As I was listening to you, I thought what happened with IBM when the PC came out. Similarly, with small nuclear reactors and micro reactors, I think we're going to have a tremendous boom in that area. But that impacts also distribution of electricity. So you don't have to build the already overloaded grid. Could you please comment on the correlation between uranium and copper and your vision as to what may happen in terms of this new cascade of smaller nuclear operations?
Yeah, if you were here yesterday and you heard Pierre Lassonde speak, he said copper is something that the world cannot do without. We'd all be sitting in the dark, and I completely agree with that stance. So, I do believe that, copper is a major requirement of EVs. It's a major requirement of distribution. It's connected to GDP, and, it is somewhat, will grow probably more so on its own than even with nuclear power backstopping it or helping it along. That said, you can't have a power plant without actually having a way or a means to get the uranium away from it. Now, how much distribution do you need? I think that depends on, how big these things are. Yes, there would be a lot of copper in one of these Amazon plants, data plants, but it's not necessarily traveling thousands of miles across the countryside. These things would be planted right next door. But I agree, there would be some correlation between the copper and the uranium.
Any other questions? Do you have one there, Marty, or no? There we go. There's Bob from Red Cloud.
Thanks, Mark. On geopolitical risk, do you see the U.S. election having any short-term effect on the uranium world?
I mean, look, I think there's bipartisan support for nuclear power and, by extension, uranium. I have to imagine under a Trump presidency, it will be easier to mine our projects and we'll get more support for them, but I don't think it's a negative if it doesn't go that way.
Anybody else? To wrap things up and bring it on home? No comment?
No, I agree with Phil on that one. It's pretty straightforward. Nuclear wins either way. Power generation is important for both parties, and nuclear is favorable for both of them.
Yeah, a lot of the nuclear policies that were put in place were bipartisan policies that came in during the Trump administration and carried on, and were even supported, if not expanded on, during when the Democrats were in power. So,
Thank you very much, gentlemen, and thank you all for attending.
Okay, guys, thanks for that. Just want to remind everyone that we're not finished. We've got another panel that's going to be starting here right away, and quite exciting. I think you'll be pretty interested to know, too, at about 1:30, we'll have Sprott presenting their physical uranium trust unit. So why don't I invite David Talbot to join us on stage here again to moderate a panel with Cory, Wayne, and Troy from CanAlaska Peninsula Energy and ATHA Energy, just to take a look from the challenges and opportunities on the exploration side.
Troy, pass mine down if you don't mind. We'll get you one if you need it. Thank you. Okay, good afternoon and welcome back. So time to put some others on the hot seat here, if you don't mind. So we've got about 40 minutes in this panel session, but I'd like to welcome 3 CEOs to the stage here. The theme here is uranium mining, exploration challenges, and opportunities. And I'd like to cover a broad range of topics here, including some geopolitical, operational, ESG, and regulatory issues, while allowing perhaps each CEO to showcase the company's unique perspective on based on their stage of development. So first, some introductions here. Closest to me here, we've got Wayne Heili. He's Managing Director and CEO of Peninsula Energy. He's a mechanical engineer with about 30 years experience in uranium mining. Most recently, he was president and CEO of Energy, where he supervised the overall design, construction, commissioning, and ramp-up of the Lost Creek ISR mine in Wyoming, which is probably, up until now, the Cadillac of ISR plants. And, I'm a Cadillac guy. So he was also operations management of Christensen Ranch Irrigary in Wyoming, and other experience in Texas. He's also a past president of the Uranium Producers of America. Next to him, we've got Cory Belyk. He's CEO of ATHA Energy. He's got an extensive international and Athabasca Basin uranium experience. He was VP Operations and Project Development and VP Exploration Community for NextGen Energy while they were running through development. He was also an exploration geologist with Cameco in Saskatchewan in Australia, and he was chief geologist at the underground Eagle Point mine up near at Rabbit Lake. And then finally, we've got Cory Belyk. He's CEO of CanAlaska Uranium, another geologist with over 30 years experience in exploration and mining, project evaluation, business development around the world. He's worked with Orano, he's worked with Urana's exploration, most recently with Cameco, where he had oversight over the Mongolia and Australia offices. And then he's been on the exploration team during the recent Fox Lake and West MacArthur uranium discoveries in Saskatchewan as well. So, gentlemen, welcome to the stage. So let's kick it off here. From each of you. Each of you represent a different stage in uranium development, from exploration to production. And you had some news out recently there, Wayne, as well. Could you maybe briefly describe where your company stands in its current development, and really what the key challenges you have at this stage?
Okay, I guess I'll take a crack at it, David. We're earlier stage exploration company. We're working on currently our brand new ultra high grade uranium discovery we're calling the Pike Zone, just 15 kilometers west of McArthur River, Cameco and Orano's joint operation. That's just a fresh discovery in the last 6 months or so, really proving to be very significant, we believe, in the discovery space. So we're at the very early stage, so front end discovery, and now we're moving into what I would call is significant delineation. So we've proven through the summer that we have the extra high grades, the ultra high grades consistent, starting to go into that third dimension and improve continuity, and now we've stepped out and expanded its footprint considerably just late in the summer. So that poses a new challenge in that we have to ramp up our operations to some degree, which takes people, takes financing, it takes drills, contractors, and then it's going to be literally a race to get that resource hopefully defined in the next 6 to 12 months, and really start to reset the, let's call it, the value of the company. And that's a very fast process, and that timeline is going to be very short. So there's a lot of different challenges in there to overcome, and we're getting ready for it start of January.
Troy.
Thanks for having us, Dave. ATHA Energy is a at-scale exploration resource development company. So we have about 8.5 million acres of exploration property across the Athabasca Basin, the Thelon Basin, and the Central Mineral Belt in Labrador. Those who follow the uranium space obviously know the merits of the Athabasca Basin, Thelon Basin being a very direct analogy to that. But in our mix of our exploration assets in our portfolio, we also have the Angulac project, which is a 43 million pound and growing uranium resource, one of the highest grade resources outside of the Athabasca Basin at 0.69% U3O8, with significant growth and expansion characteristics, which we outlined and defined this summer through about a 25-hole, 10,000-meter drill program that shows the expansion potential that will ultimately then end up driving our path forward at ATHA.
Wayne. Thanks, David. Peninsula Energy is a near-term, make that very near-term, producer emerging. We have our flagship property in the state of Wyoming. We're an in-situ recovery company. With the Lance projects, we have previously produced at Lance in a different iteration of the company and in a different fashion. We're changing the way we approach the in-situ recovery from an alkaline chemistry to a low pH chemistry, which is practiced in Kazakhstan and elsewhere around the world, and it's the most successful way to produce low-cost pounds of uranium. We're really excited about the opportunities in front of us as a company to get production back up and ramp it up to about the 2 million pound nameplate that we're building our plant for. And so the challenge is really, early challenges is just coordinating all the licensing, financing, manpower, materials, construction. You name it, we're in the midst of all of that, and it's a very exciting time, hoping to be in production before the end of this year.
So your technical challenges, I guess your challenges right now more technical execution and logistical than financial or even regulatory.
Yeah, fortunately for us at this time, we're very well financed. We have the cash on hand that we need to put the project into production and to carry it down the road a little ways. For us, it is an execution of the plan. That's the stuff that keeps you up at night. A little problem can snowball, and let's not use the four-letter word snow yet, but snowball into bigger things if you're not right on top of it. So. Every day we're looking at construction progress, in both the plant and in the wellfield areas, making sure that everything is on track so that when we get started, we can have a very successful ramp up.
Okay. Cory and Troy, uranium companies, they need incentives. They need incentives to develop their projects, to carry out exploration. From your perspective, are we at the stage where we have those incentives? Is it something that we're waiting for? Do we need higher uranium prices?
I look at. I think there's two sides to that question, Dave. It's really incentive prices to incent new production coming online, right? And to look at that, you have to look at the incremental cost of production of the last, say, 10 or 15% of that supply side. The price isn't there yet. The price certainly is not there yet to incent that incremental production to come online. From an exploration perspective, hey, there's a growing understanding of the need for uranium, the need to turn exploration back on. I think we heard it in the last section, that the erosion of risk capital that came into the space from 2007 and declined from there. You know, just a direct point on that. You know, both Cory and I were within the Cameco Corporation for a number of years. We had exploration budgets that topped out at in the range of 130 million per annum. Post 2012, that contracted down to about 10 million, $8 million per annum, right? And so, you know, the capital, I think, is returning to the sector. The risk capital is returning to the sector for exploration, and I foresee that continuing to increase as the fundamentals of the industry continue to strengthen. But there's a significant period where that lack of investment and underinvestment in exploration development stage projects, like we heard in the last segment, has set up significant supply side challenges to meet the growing demand as we move forward.
Yeah, I agree with you, Troy, almost completely there. And the lack of investment in exploration for the last 15 years has been shocking. And what it means is that those quality assets, those new assets, just haven't been found. They haven't been searched for. There's been a few around the world, no doubt, but there aren't many tier one types. You know, the ones that are going to replace Cigar, MacArthur, perhaps the strain coming in the Kazakh market. That all has to be found yet. There's a lot of uranium out there, a lot of deposits, but they aren't at the current price. So, you know, if you reset the price, you're going to incentivize the exploration, you're going to incentivize that risk capital to float down to our levels, not just the producers or the near-term producers. It has to filter all the way down. And what we tend to see is a bit of a rubber band effect in the space where, you know, the majors like Cameco, some of the mid-tiers like Denison, some of the others like Peninsula will start to move as they are now, and then the lower level juniors like ourselves tend to lag. And if you just look back at the last cycle, the actual switchover from that to where the juniors really outpaced the majors or the mid-tiers was over the course of about 1 quarter, and it completely flipped. And the extreme valuations of the junior space just took off. And I think that's what we're setting ourselves up for right now. Through the summer, we heard about it before. It was a slow summer. We're setting ourselves up for that exact scenario where it's going to flip in 1 quarter, and the groundwork's just getting laid. So it's going to be a special moment in time here, I believe, in the near term, for the junior space, and that capital is going to flow back in. The work's going to get done, but now you're making discoveries which are going to be 15 years out in time. And you have fundamental assets, tier one assets around the world, most notably in Saskatchewan, that are going to be out of ore in under 15 years. 20% of global uranium supply could be offline in that time frame. So the time is now. It's actually too late. So, you know, it's going to switch, and discoveries are going to have to be made, and that's where we kind of come in.
Exactly. So, you know, now Wayne, you know, as a company that's putting an operation back into production, you know, we are seeing rising uranium demand here. Are nuclear utilities becoming more interested in contracting right now? Are we seeing a lot of companies reaching out to you, or is this a matter of, you know, primary contracts being rolled over, or are they really concerned about security and supply, and they're coming to lock that up?
I think security of supply is a real issue for the utilities. They have an established relationship with the established producers, and they're now seeking out new relationships with up-and-coming producers. So we do field plenty of conversations with the utilities, talking about, you know, how we can add additional supply into their supply sources. They want to know how much is available from Peninsula. They want to know, you know, what prices we would let it go for, and we have those conversations all the time. Now, as a company, we have a pretty healthy contract book already, and, you know, we're not looking to contract in the near term. So, you know, the next couple of years, 3-4 years, we're really satisfied with our contract book and how it matches our production profile. And, you know, unfortunately for the utilities, we're not the answer to They're security of supply questions, but opportunities to contract into 2030, 2031, 2032, they're available to us. We just haven't agreed on price yet.
What is your contracting strategy? We've got some companies that go out and they will sell everything and it will be completely linked to spot market. We've got other companies that will only deliver into the existing contracts they have and they won't produce any more. What are your plans?
I've always maintained that a responsible company will commit a portion of their future production into contracts. It's going to guarantee you certain revenues. It's going to guarantee the success of your project. I've always felt that if you can contract enough to cover your fixed and base costs, then everything else that you sell into the market is your blue sky. And that could be, probably 60% of your production will cover 100% of your costs. And then you have 40% of your production, which is blue sky in the open market and will be your profit margins and your return for your shareholders.
Okay. Maybe a question out to all of you here. Uranium certainly isn't an easy industry or exploration. Besides some technical challenge, we've seen some geopolitical issues here. There's transportation issues in parts of the globe, regulatory delays, political upheaval. How can investors evaluate and maybe avoid some of the risks or pitfalls in the jurisdictions that you're working in?
I think all three of us on the stage right now, you look across Canada, we've been mining uranium in the Athabasca Basin in Saskatchewan since just after the Second World War, since the early 50s. It's what we do in the province. We've been a leader globally in that space for a long time. No different for Wayne. You're in a great jurisdiction in Wyoming. And then in none of it's an emerging jurisdiction for us. And the advantage there is it's all under the Canadian Nuclear Safety Commission. The regulatory process within Canada to permit a uranium mine goes through the province and it goes through the federal process. So it's the same in Nunavut as it would be in Saskatchewan, et cetera. So jurisdictional risk, I think that's going to become increasingly more important in this bifurcated uranium market that is emerging. And you look to the strength of a stable political system in Canada, you look to areas in the U.S., et cetera, and it becomes increasingly more important, Dave.
Yeah, jurisdictional risk. In terms of the Athabasca Basin, I've looked at projects all over the world, and there's a lot of risk out there that I think investors aren't even aware of. But Saskatchewan, 80% of the population roughly is supportive of the nuclear space. Where in the world does that happen? Not many places, if anywhere else. So Saskatchewan has a very long history of uranium production, very supportive in the communities. It doesn't matter which government's in power provincially or federally, the support is there in Saskatchewan. So those projects are going to move forward. I think one of the risks that are sort of new, including to Saskatchewan, are the indigenous pieces. And I think it's becoming increasingly important that investors look to companies that have their indigenous agreements in place, even at the exploration stage, because that is your social license to operate. And there are pressures now in the permitting process, even at the exploration stage, where you might not receive your permits, or you might, even if you receive the permits, not have the ability to actually execute your program. And that's a risk to the shareholders that give you, for instance, flow-through money, where you have to put it in the ground by a certain period of time. So I think those companies are signing these agreements, logical commercial agreements with the First Nations entities, will become critical. We have 2 of our 3 in place already, and we're working on the 3rd as we speak. So I'm confident that we have that support. And that just bleeds back into the provincial regulators, because they do ask, how are your duty to consults going? Well, they're going very well. And that ultimately just allows you to do what you do. So it's an important piece to look at too.
And just to build on that a bit, Cory, I think we're in the good fortune in Saskatchewan of being in a position of having very supportive Indigenous communities across the board. Across the eastern producing regions of the Athabasca Basin, the vast majority of the operating workforce within the operations, and when I say majority, 50+% of workforces at the operations that are in production are from the north. and across the southwest Athabasca Basin. Extremely, you look at that 80% approval rating, work that we do across the north also says that, the communities across the north have a similar approval rating when it comes to the uranium space and industry. So it's obviously something that is a key focus and priority for companies operating in the area to be good corporate citizens, and it's also a tremendous opportunity for us to align and have that support going into a regulatory process and into a producing environment.
And in the United States, I think, the previous panel touched on properly that no matter how the federal election comes out, we feel very comfortable that nuclear and uranium mining by extension is going to have decent support from the government agencies. But for the investors who want to, discern where are the real opportunities, I think you need to look at on the state level, which states are agreement states, which states have control over the regulatory processes for the uranium miners. And Wyoming is an agreement state, which means that the state of Wyoming has an agreement with the Nuclear Regulatory Commission that the state executes the safety programs and the regulatory programs at the state level. For us, it means we don't have to get on an airplane and fly to Washington, D.C. to meet with our regulators. We actually have, the regulators at the state capital, Cheyenne. It's just down the road. And we get very good accountability and very good turnaround from our state regulators. Wyoming is a resource development state. It really understands mining and supports mining and resource extraction. So, we have probably one of the best regulatory worlds in the state of Wyoming for uranium mining, and that's been evidenced by very quick turnarounds on our permit requests and approvals. Our project is fully licensed. We just received the permission to start operating in our new mine unit 3, which is, again, we need that permission, but we're going to start production at the end of the year. We have that permission in hand now. The state of Wyoming is very responsive to our needs and as a regulator. So agreement states are the place to look if you're looking to differentiate within the United States.
Yeah. And Wyoming's only been an agreement state for what, 5-6 years now?
That's right.
Recent.
Yeah. When in my previous position with ATHA Energy, I lobbied with the state, and Ralph Canode, who's in the audience here, lobbied with Peninsula for the state to become an agreement state. That's just been a terrific outcome for the industry operators in the state of Wyoming.
Right. So, Cory, CanAlaska recently made a very high-grade discovery out in the Athabasca Basin. Has this impacted your business strategy at all from top down? Are you seeing increased investor interest? And really, how are you balancing your exploration and versus, say, wanting to develop this thing and fast-track it? And, I dare say take shortcuts because I know you, but, how is this impacting your firm?
It's been a big impact, David. 6 months ago, we drilled a hole that honestly changed the direction of our company. And when you drill these ultra-high-grade uranium intercepts in the Athabasca Basin, 15 kilometers from major infrastructure, and access to a mill just down the road that has a clear production issue, you get attention. So we've seen our shareholdings move from retail to institutional through the summer, and that continues, I believe, to change. But it's giving us access to perhaps opening doors that didn't exist prior to 6 months ago. So that poses a new challenge because now there becomes expectations that you're going to move this forward quickly, and you're going to move this forward to tell your shareholders what you might have on your hands. And when we came through the summer, the results continued to be extremely positive and perhaps even better than we saw in the winter. So, I think we're adjusting ourselves from an exploration company where we have, say, 5 or 6 projects on the go looking for that one hole, to now a company that is focused almost solely on our West MacArthur asset as we look to work toward our first resource estimation, assuming things hold together in the next 6 months, to help re-rate the company for our shareholders. And I believe that goal is achievable, but it does come with needing the people, needing the finances, needing the social license, needing the contractors, as we talked about before. So we are going through a very fast evolution to what we see as a very fast potential re-rate on our stock with our very first resource on what looks to be an incredibly rich uranium discovery just next door to McArthur River. So it's a fantastic time for us.
Okay. Well, Wayne, you're moving into production here, and in the previous panel we talked a little bit about policy changes and things we'd like to see from the government. Are there any key policy or regulatory changes you'd like to see that could help uranium miners such as yourself? Are there some things that they could do to, say, reduce the bottlenecks and speed things up without really impacting anything?
Yeah, in the United States right now and under the current administration, uranium is not regarded as a critical mineral. And if there was a policy change one that would happen if we have a change of administrations, it's likely that uranium would be put on the critical minerals list. Why is that important? Because that puts a priority on permitting activities at the federal level. Now, I just told you that I'm not dealing with a lot of federal regulators, but as an industry, with other states in play, the uranium industry in the United States would benefit from having uranium recognized properly as a critical mineral. That's absolutely one policy change. And then really, this is a big swing, this is different, but if you look at, we've been successful in getting a ban on importation of Russian materials into the United States, nuclear fuel. And we all know that there's opportunities to get an exception for a period of time, and really till 2027. The bigger picture for us, I think, policy-wise now, is to recognize that Russian materials can sidestep the sanctions by supplying into other nations, and the big threat right now is that Russia is selling more material to China, and China is selling more material to the United States, kind of sidestepping those sanctions that we put in place. And we need the regulators, the government, to recognize that and make sure that China is not going to be the ones sidestepping, and our dependence on Russia doesn't become a dependence on China, that it becomes a dependence on the U.S. domestic production.
Is that a loophole that's going to be closed here relatively quickly? Because uranium has to be tracked from source to end user and back again.
Well, it's a loophole, all right, and the government has to really address it promptly so that we don't become dependent on Chinese. Because uranium is tracked by its source, but China has a lot of uranium, and they can take in uranium from Russia and then sell us other origin material, and just change their inventory origins. It doesn't matter to them, it matters to us. So we just need to make sure that our dependence doesn't shift just from one geopolitical adversary to another.
Okay. Now, securing funding for exploration and development certainly can be challenging, especially in a volatile commodity like this, where we have investors sort of in and out of positive sentiment. But really, how are you guys navigating the current environment? And this is sort of for Troy and Cory. Are you seeing interest from investors right now? Are there still people that want to play the game?
We're seeing all kinds of interest coming in from again, doors that we couldn't open before. Success always drives that, I think, but I think it's coupled right now with the market. We saw yesterday a big move across the board, and I think, as the prior panel said, it was on news that, while incredible, isn't that surprising. So, I think if you have good projects, if you have good, stable shareholders, I think if you have good, in our case, discoveries per se, or development projects, you can go find the capital. And it's always going to be a challenge, but I think doing what you said you were going to do is the key. And if you're getting rewarded for that through the drill bit, and you're going to have access to that capital, continue to do what you do. So it's a challenge, but it's manageable.
So, Dave, sitting here as as a technical guy within ATHA, that's one of the things that I appreciate the most about our company and our organization is the capital markets team that's behind it. One is it's the will of the market to invest in a certain segment, and two, it's access to that capital. We've been fortunate since inception in 2023. We've raised about $55 million into the deal, largely institutionally, which is kind of front running the current market that we're in right now. And so, access to capital is critically important for companies of our stage to be able to aggressively pursue and advance projects in line with what this market's doing. So it is a critical factor. It can't be underplayed, but there is definitely capital out there in support of good projects and good teams.
Okay, thank you. So we've got about 6 minutes left. Why don't we look out to the audience for some Q&A? Anybody interested in asking a question to our panelists here? No hands. I can keep going. I can keep going. So, did we have some? No. Okay. Flag me if we get anything. Anyways, uranium mining and exploration certainly requires a specialized workforce, but you've got to attract talent, you've got to retain talent, and that's becoming a lot more challenging. And I think it will, especially with the competition from other commodities as well. But what strategies are you guys employing to ensure you've got the necessary skilled labor force in order to move forward here?
Well, as an emerging producer, but also a past producer, Peninsula put a really important strategy in, and that was retention for key staff. We had key staff for operating. We retained them through the period where we were idled. We had retention bonuses. We had additional incentives to keep the people engaged and to keep the project moving forward at all times. So we're very fortunate to have key staff in place. It's very capable of putting this project back into production. Our labor itself, the mechanics, the construction guys, that's a harder nut to crack. Retention is really difficult in that group. You hire two, you lose one, and there's a lot of turnover. So just making sure that your pay rates are competitive at all times when unemployment is low in the region. It's very, very important to just be a competitive employer for the workforce.
So it sounds like the trades are really hard to retain. Those are the guys that you need to fight with. You don't need to hold on to your middle management quite as hard there.
Yeah, there's a lot of jobs for the people in the trades in the state of Wyoming, and it has been a challenge to make sure that we keep the talented tradesmen and the guys who are going to build new well fields, the guys who run drill rigs. Drill rigs are competitive in the state. There's a lot of people pushing for uranium projects in the state and wanting to drill and explore, and maybe we'll talk to the explorers about their labor challenges.
Yeah. Dave, we're in a fortunate position. Our head office is actually just kitty corner to Cory's in Saskatoon. Saskatoon has a high density of uranium subject matter experts from a technical perspective. It's a small community, and so access to skilled people at kind of senior levels, execution level people, is there for people that have been in the space. Now, where the challenge becomes is how do you leverage and multiply their effort when it comes to field programs, scale up, et cetera. We've got a couple specific agreements that we've signed, long-term master service agreements, kind of partnership term type agreements with key contractors. One of them would be a technical service provider that we're able to leverage our efforts in field programs and have access to people on the ground in the field to get the work done. The other one would be our drilling contractor. It's a group of guys that I worked with at NextGen when we scaled up from 2 drills to 12 drills. We've got a same type of arrangement, MSA, master service agreement with them that allows us to scale up, scale down as required, and still have access to people and equipment. So, I think you can by being cognizant of it, planful, mindful, and having good contracting relationships, I think you can help offset that risk.
Yeah, for us it's at a smaller scale than perhaps these gentlemen, but for us it's been networks. And it's people that you know or have worked with in the past that you want to do something special with again. And I think if you surround yourself with people that are truly, and I know some may cringe at this, but I like the concept of a family. And families do have discussions that are tense sometimes, but mostly you just want to be together. And we're fortunate at CanAlaska to have a team that shows up to work every day at the office. They don't work remote as a rule. They truly want to be there. And this is before we drilled our good hole in February. This is a culture that we've been very diligent to put in place. And I think when you do that, you can tap your network to bring in the right people, even when they might be at what might be perceived to be a better job, longer term, short term, or monetarily. Give them the opportunity to come together and work with you again. And I truly believe that's how we've built our company. And it's all built around culture, network, people you want to be around every day. And special things tend to happen, and they tend to stay.
Good. Would you say this time around the Athabasca Basin is better prepared for exploration across the board? Because, going back, let's say, almost 20 years ago, Cameco had the expertise, and everybody else were explorers. Now, you guys a lot of people have fallen out of Cameco. NextGen, Fission, Denison, Hathor, they've all trained the next generation of geos. So you think we're in good stead?
I think we're in a good space. If you look around the leadership of a lot of these juniors, mid-tier companies in the Athabasca Basin, you had a couple here on the stage right now. Troy and I work together at Cameco. A lot of my team is built from Cameco and Orano geoscientists I've known a long time. And those are good companies to grow up in. I know my VP of exploration commonly talks about that it's a great place to learn. But if you truly want to fly, I think you got to get unleashed, and you got to get out there, and you got to have the access to capital on great projects with great teams, and special things start to happen. So, are we set up better this time around? I don't know, because there is a lack of that mid-tier explorationist with uranium experience. That will grow. That will filter down through mentorship and as we move through some of these assets in the Athabasca, but it will take some time. Just like lack of discovery, there's been lack of development. But it's by no surprise that you see a lot of the top-tier management teams in the space, ex-Cameco, ex-Orano.
Great. Okay. Cory, Troy, Wayne, thank you very much.